because now things are getting spacious, right? Small entrepreneurs, even sectors which were not considered as having a huge prospect, nowadays has tremendous potential in today's globalized world. And that classic example we can see from this particular article, and it might inspire you, it might keep you into thinking. But I think if you do everything right, then maybe today, tomorrow, your name will be also in one of the list of Forbes or one of the articles of Forbes if you keep inspiring. Okay, so this is one interesting news. I was really happy to see these kind of new sectors in as an entrant in billionaires list. India's men's new billionaire women as Nykaa founder grooms her beauty retailer for an IPO. Now, since it is a beauty retailer and it is a sector which um, most of the time doesn't come in top list, but yes, it has come from India, and many Indians and South Asians are now they are listed in billionaires list. So let me read a little bit out. Veteran investor turned entrepreneur Falguni Nair, whose beauty retailer Nykaa is poised to launch its IPO, has become India's newest billionaire. A pre-IPO private placement in June valued Nykaa at $2.3 billion, putting Nair in the 3 comma club with an estimated net worth of 1.1 billion. The, the listing which could value the 9-year-old company at an estimated 4.5 billion or more. So it's already been 9 years the company has established, and the estimates was 4.5 billion of valuation, would be huge windfall for Nair, propelling the worth of her initial 2 million investment even further. Okay, her investment was around $2 million. As per the draft red herring prospectus, which was filed in stock markets regulator this week, the company is seeking to raise 71 million through a fresh issue of shares, and also proposing to sell 43.11 million shares by existing shareholders, including Nair. The IPO will result in massive payoff of Nykaa's early investors, such as consumer goods billionaire Harsh Mariwala and Hong Kong-based commodities billionaire Harinder Pal Singh Banga. So you can study further. She had 54% stake in the company along with her husband, so she has protected the majority shares. And moving on, you can also see that shopping stores boosted to 334 million in annual revenue, and company also reported net worth of 8 million in the same period. Okay, and also again net loss of 2 million. This is something we have been observing, isn't it? Company is growing in sales, but it's incurring loss. Why? I think because of huge capital expenditure. It leads to huge capital expenditure. It usually leads to huge amount of depreciation and huge amount of expenditures. So any comment, any observation from this article, please let me know. If not, then we'll do roll call and move on with our class. Okay, one thing for your convenience, if you let me share this article in your chat as well. Okay. If you are interested, if you have been active in share market, you can see that within 1 year, here's a list of companies and how much these companies has grown within 1 year. Okay, so you can see Gurkha's finance has increased from 106 to 1153. That is 987% of growth. Our required return is usually 8% and 10%, isn't it? But within 1 year, this Gurkha finance, apart from dividend, it grew by 987%. So yes, some prospects are available. Although it's total boom, like you can see that this is already overvalued share. Why? Because you can go back and calculate its intrinsic value. Since its share value is around 1153, right, market price. So we can go back and study its valuation, study its intrinsic value, and find intrinsic value by applying formula which we have learned in risk and return, right? So doing that, we can definitely understand that these shares are all overvalued shares. And interestingly, you can see that all the multinational companies are on bottom three. See, Nepal SBI Bank, Standard Chartered Bank, their growth is only about 11% for Nepal SBI Bank and 12% for Nepal, Standard Chartered Bank. And for average bank, it's about 36% only. So, so interesting data. You can go back and see these. I have shared you in chat as well if you are interested in investing and all. Okay. So with this, shall I? So any comment in this article? Anyone? Any observation? If not, then shall I move on for attendance? Yeah.
So हामीले आइपिओ भन्छ नि,
हजुर
हामीले आइपिओ भन्छ नि नेपालमा पनि, जस्तै नेपालको नेप्सीले कन्ट्रोल गर्छ नि। सो नेपालको कुनै
Yeah.
अब कुनै आइपिओ चाहिँ बाहिर लिएर जानु पर्यो रे भने चाहिँ इज देयर एनी पोसिबिलिटी? छन त छ, तर कसरी हुन्छ त्यस्तो हो चाहिँ के छ नेपाल
Okay.
नेपालमा?
So
आई थिङ्क
yeah, very interesting.
मैले दुई तिनवटा कुरा चाहिँ, एउटा आई हेभ कम वान अफ द कम्पनी इज ट्राइङ टु लिस्ट अन के अरे लन्डन के अरे लन्डनको उसमा स्टक
Yeah.
एक्सचेन्जमा चाहिँ लिस्ट गर्न खोजिरहेको छ अरे भन्ने सुनेको थिएँ।
Yeah.
मेबी रुमर एराउन्ड दिस कर्पोरेट रोल त हुनसक्छ जस्तो लाग्छ, तर पोसिबल नि छ नि। नेपालको दुई तिनवटा कम्पनीहरू त बाहिरै लिस्ट भएको छ, लाइक डिओवक रुद्र पाण्डेले त उसमा न्युयोर्क के अरे नास्डामै स्टक लिस्ट गरेर उता कम्पनी बेचेर नेपाल आएको नि उनीहरू त।
Yeah. So interestingly, I have been showing you article where Chinese investors are listing its shares in US and Indian investors are listing their shares in international markets. So why not Nepalese,
नेपाल, यस सर।
Nepal, right? So a very interesting question, Praveen. And yes, what you have heard is true. The company's name is Nifra. You might have heard Nepal. Do you know about Nifra?
यस सर।
Nepal Infrastructure Bank, right? So it is a bank which was built for development of huge projects of country. त्यो राष्ट्रिय गौरवको योजना भन्छ नि, हो तिनीहरूमा चाहिँ लगानी गर्नलाई बनाएको हो, इन्फ्रास्ट्रक्चर डेभलप गर्ने नेपाललाई। And you can go through this site as well, infrabank.com. अनि दे सुरुमा when Nifra established itself है, उनीहरूको उसमा त्यो डकुमेन्टमै विल लिस्ट इन लन्डन स्टक एक्सचेन्ज भनेर लेखेको थियो कि। बट होप द्याट अगेन अहिले सिइओले एड्रेस गरेर मेबी विल ट्राई अगेन फर लिस्टिङ इट देयर भनेर भन्नुभएको थियो, तर अहिलेसम्म भएको चाहिँ छैन। होप द्याट इट विल बी एज अ ओपनिङ फर नेप्लिज कम्पनीज टु गो एब्रोड। So it was the company Nifra Bank. अहिले यो भन्दा बाहेक there are no any other companies which has tried. Why? Because of scalability, number one. Number two, अलिकति नेपालले ग्लोबल डिमान्डमा एक्सपोर्ट गर्ने खालको कम्पनीहरू बनाउन सकेका छैन जस्तो लाग्छ मलाई चाहिँ। Maybe I don't know all the facts, but
what is the possible के अरे वर्कफ्लो चाहिँ कस्तो हुन्छ होला सर यस्तो बाहिर लिएर जानलाई चाहिँ?
Praveen, your sound is a little bit less audible. Can you please?
सर हाम्रो वर्कफ्लो चाहिँ कस्तो हुन्छ होला? जस्तै रेगुलेटरीज त हुन्छ नि त टर्ने, अनि निफ्रा इज अल्सो लिस्टेड इन दिस नेपाल स्टक एक्सचेन्ज होइन, त्यही कुरा फेरि लन्डन स्टक एक्सचेन्जमा रे उताको एउटा फन्डिङ जुन चाहिँ क्याप हुन्छ नि, यताको क्यापको कुराहरू कसरी कम्बाइन रूपमा कसरी गर्छ?
यस्तो हुन्छ लाइक नेपाल र लाइक इट्स जस्ट अ मार्केट प्लेस होइन। तपाईँ हजुर कालीमाटी सब्जी पसलमा गएर सब्जी किन्नु या तपाईँको होम प्लेस नयाँ बानेश्वरमा बस्नुहुन्छ भने नयाँ बानेश्वरको सब्जी बजारमा जाने भन्ने यस्तो भयो कि तपाईँ कालीमाटी जानु भने नयाँ बानेश्वरलाई मतलब भएन होइन। तर रेगुलेटर्सहरू जस्तै नेपाल राष्ट्र ब्याङ्क नेपाल गभर्मेन्टहरूले त पक्कै पनि हेर्छ। अनि इफ दे आर लिस्टेड इन्डिपेन्डेन्टली इन बोथ मार्केट्स, मेनी कम्पनीज डु द्याट। both markets are regulated by their own marketplace differently. त्यो हुन्छ.
सर धेरै जसो के को रोल आउँछ होला नेपालको साइडबाट चाहिँ कुन कुन रेगुलेटरी बडिजले हेर्छ होला राष्ट्र ब्याङ्क त जहिले पनि बसिरहेको छ अब इन्टरनेसनल भएपछि पैसाको कुरा नेप्सी विल बी देयर अभियसली त्यो बाहेक अरूहरू त्यो सेमनहरूले नि यसमै कन्ट्रोल गर्छ.
Yeah, I think C1 is for Nepal, Securities Body of Nepal, right? C1 ले त नेपालकै हेर्छ, बाहिरको चाहिँ नेपाल गभर्मेन्टले नि हेर्छ, नेपाल गभर्मेन्टकै अन्तर्गतमा पर्छ. अब कुन डिपार्टमेन्ट भनेर मिनिस्ट्री चाहिँ ठ्याक्कै छुट्याएको छैन, बिकज इट्स नट भएको छैन नि त कुनै पनि. स्वायत्त निकाय बनाउँछ होला.
होइन सर
हजुर
पाइलट प्रोजेक्ट फर नेपाल गभर्मेन्ट होइन र
यहाँ
अनि सर हाम्रो ब्रोकरहरूले पनि किन्न पाउँछ होला यताबाट उताको के छ?
नो, ब्रोकर्स आर नट अलाउड टु बाई सेयर्स. अब त्यही त अस्ति न्युजहरू आइरहेको थियो होइन, दितोपत्र बोर्डको इभन मालिकले आफ्नो छोरीको नाममा किन्नुभयो, छोरीको नाममा सर्वोत्तम सिमेन्ट राख्नुभयो भनेर कन्ट्रोभर्सी भइरहेको थियो. सो ब्रोकर आर नट अलाउड टु डिल इन सेयर्स है, तर अब इन्डाइरेक्टली गर्नुहुन्छ. रेकर्ड हुँदैछ कि छैन सेसन? ओके, इट्स रेकर्डिङ. ओके, सो ओके, लेट्स प्रवीण, एनी फर्दर क्वेसन्स?
नो सर.
For now? No? So okay, so let us move on for attendance. Okay, so Alex, Bista, present. Archana,
present sir.
Present. Assis, Dipesh.
Yes sir.
Dipesh, you are the nominee for today, right?
Yes sir.
Okay, please be prepared. After roll call, I'll call your name, and also please think about somebody's name to recommend. Okay. Okay. Next, Ivan.
Yes sir.
Present. Jeju.
Yes sir.
Present. Marina. Present. Ninju. Present. Nissan. Nissan Shrestha. Nissan Shrestha is absent. Ojasvi. Present. Prakriti. Present. Prasamsa. Prasamsa Silwal. Absent. Praveen. Present. Raman. Raman present. Ratnaprabha. Present. Revision. Present. Ritish. Ritish Kumar. Absent. Riwaz. Present. Ronim. Present. Satyam. Satyam Shrestha. Absent. Salina. Salina Gising Taman. Absent. Sarisma.
Yes sir.
Present. Shekhar.
Present sir.
Okay. Smith. Okay, present. Swarup. Present. Eunice. Eunice Kiri. Absent. So I'll call name of absentees. Okay, Prasamsa is present. I'll call name of absentees. Please, if you are there, let me know. Nissan Shrestha absent. Ritish Kumar absent. Socham Shrestha absent. Sarina Gising Tamang absent. Unes Giri absent. Many absentees today. 1, 2, 3, 4, 5. Okay, so any confusion from the last class or anything? If you have anything to discuss, please let me know after revision session. So okay, so Dipesh, are you ready?
Yes, sir.
Okay, so Dipesh, you have got 1 to 5 minutes. You can reiterate what we have learned in the last class in your own words. So I'd like to welcome Dipesh for the revision. So hand over the floor to you, Dipesh. Over to you.
Thank you, sir. So in our previous lesson, we started with a new, fresh chapter, capital structure and leverage, and their primary parts are source and application, uh, which is where money comes from and where we spend it. Our liabilities and money could be used to support the business. Uh, each source of each source of has its own cost in terms of debt and equity, in which debt equals interest and equity equals dividends. Furthermore, the cost of equity is limitless. The interest rate is fixed in mm, capital structure. Cost of stock is the di- the cost of stock is the dividend, and the profit is not set. Also, the capital structure with low cost WACC is referred as the optimal capital structure. Similarly, we learned about EBIT 1 minus tax interest is deductible before calculating tax, but dividends are not. And moving on, uh, you gone through an article on Caterpillar Inc. CAT, a heavy-duty vehicle business. Also, in talking about CAT had 89% debt in its book value. They lowered their cost by attempting to convert debt into equity, and the firm struggled during the Great Recession. And the content of this chapter are capital structure, business, and financial risks, determining the optimal capital structure theory, checklist of capital structure decisions, uh, variation in capital structure. Also, you talked about how the capital structure can be measured and should we work with book value or market value. Uh, in moving on, you uh, to a introduced to a new definition of risks. There are two types of risks in business: business risks and financial risks. In business riskiness of firms' assets. If no debt is used, risks which is always there in business is known as business risks. Also, standard deviation is the key element to measure risks. Talking about You talked about a graph where wider the graph, higher the chance of risk, smaller the graph, less the risk. It is denoted as uh, also risk can be denoted as return on investment capital, ROIC, where its formula is EBIT bracket 1 minus tax divided by total invested capital. Moving on, the decision about factors affecting business risks, which are competition, demand variability, sales variability, input variability, product obsolescence, foreign risk exposure, regulatory risks, and legal exposure, the extent to which costs are fixed. Yeah, also, we discussed about competition between CG and Subisu Internet in today's uh, market. Lastly, you solved a mathematical problem about the business risks. Thank you, sir.
Okay, great job, Dipesh. Big round of applause for Dipesh. Thank you so much for that descriptive report. So good job.
Thank you, sir.
So Dipesh, can you please nominate someone?
I think I'll nominate Jeju.
Jeju. Jeju, please accept the nomination.
Yes, sir.
Okay, thank you so much. So let me write your name in our roster. Great. So again, thank you, Dipesh. Love the way you described in a descriptive way. So let us move on with today's slide and continue our capital structure. We were yesterday in a very interesting session where we were discussing about how fixed cost is a killer of our business and how does it affect, and especially we discussed about the term break even, right? And break even, this formula of finding break even is really important, pragmatic, practical, and in many business, many of your clients or many of your friends might ask you that what is the number of sales which I have to do to reach in that still point, or what is that minimum amount of sale I have to do anyway. So this is called break even, and we have proved yesterday by taking these two examples, plan A and plan B. In the case of plan A, our fixed cost was 25. In the case of plan B, our fixed cost was 70,000 rupees. Sorry, dollar, $70,000. In both cases, what happened was, as we increase our fixed cost, we understood that our risk also increases. Break-even point increases. So that leads us to have bigger business risk, right? So operating leverage is called fixed cost. So operating leverage definitely adds up to our business risk. So one point which we proved yesterday was higher percentage of total cost are fixed, the firm said, to have a higher degree of operating leverage. I hope you got it. So similarly, we are trying to plot these points in our graph. So this is a case of plan A and plan B. Price, let me zoom in a little bit. Price is $2. Variable cost is 1.5 and 1. Fixed cost 25 and 70,000 rupees. Invested capital is 2 lakhs and 2 lakhs. And tax rate is 40% for both. That's same for both the cases. So let us assume, like we always used to do, or like we always do. So demand being different, terrible, poor, normal, goods, wonderful. So our sales is wonderful in case of wonderful demand, and our sales is terrible in case of terrible demand. So what is the probability of economy to be terrible? 0.05. It's about 5%. What is the percentage of economy to be normal? It's 50%. And wonderful, again 5%. So likewise, we have input probability like this. So likewise again, so what would be the demand of how much units we might be able to sell if the economy will be terrible? Our sale is 0. We might have no sales at all. Moving on, 40, 1 lakh, 162. So it's increasing. As it's moving up from terrible to poor to normal to wonderful, our sales also increases, right? Sales also increases. So this is our pattern. So dollar sales means we are simply multiplying dollar with our rate. price. Our price is 2, right? Our units sold is 40,000. So in the case of 0, 0 into price 2 is equal to 2. In the case of second poor, in the case of poor, in the case of dollar sales, what we will get? 40,000 units, right? And we multiply with price, what do we get? 80,000, isn't it? So we got our 80,000 here. So likewise, in the case of wonderful, let us see, our units is 2 lakhs, 2 lakhs unit, and we multiply it by 2, we get our answer 4 lakhs, isn't it? 4 lakhs. So I hope you got our dollar sales as well. It's sales in plain terms. Now going back, operating cost, there is a variable cost already given, 1.5 for plan A. So this is for plan A first, this is for plan B. On the later side, you get from here, on the later side you get calculations for plan B, and before that we get calculation for plan A. So okay, seeing for plan A, our variable cost is 1.5. So if you multiply variable cost with number of units, you know that variable cost changes according to the number of units. So let's see for which one. So let's see for poor when economy is poor. So we simply multiply 40,000 with variable cost of 1.5, variable cost of 1.5, 40,000. Then we get our answer 85,000. Correct? 40 into 1, 40,000. And we also add fixed cost. So operating cost means all the cost, right? It's not written variable cost only. Operating cost means fixed cost plus variable cost. So we have fixed cost of 25,000, right? So we multiply both. So we multiply number of units, like 40,000 into how much? Variable cost 1.5 plus fixed cost 25,000. So 40,000 and 1.5, if you multiply, we get 60,000, right? And 60,000 you add with 25,000, you get your answer 85,000. So likewise, you get your operating cost. I hope there are no confusions in this simple mathematics. So operating, what is operating profit? Earning before interest and tax. What is this? Earning before interest and tax. We simply minus sales. We subtract sales. We subtract operating cost from sales. So if we subtract operating cost, in the case of poor, if we subtract 85,000 with 80, we get negative 5,000, right? So that is our EBIT, earning before interest and taxes. So similarly, you can calculate from top to bottom, operating profit from top to bottom. So as we will get operating profit, what happens? We are trying to calculate that portion, the pie. Out of all pie, the first pie is taken away by government, right? And this pie is left for whom? For debt holders plus debt and equity, isn't it? For debt and equity, this pie is left. One pie is taken away by government. So let us throw that pie to the government. Let us say to the government that, hey, you please take this tax along with you. So we are doing that. Out of all profit, first preference is given to government. So we are simply deducting tax. So EBIT bracket 1 minus tax means this. So this is the remaining amount of profit which is left for. This is the remaining amount of pie which is left for both this one, both for equity and debt holders. So as we get our pie, right, this is our earning return. And so what is ROIT? R means return on invested capital, right? ROIC. So ROIC means return on invested capital. So return, what is return? EBIT, which is left over from government, 1 minus tax, divided by this is return, and in the denominator invested capital. So what is invested capital? It's here 2 lakhs rupees. Sorry, 2 lakhs dollar, right? If you divide by 2 lakhs, then you get your answer 1.5 or 7.5, 16.5. Similarly, you can calculate all these. Okay. So like we did in planning, if you did not understand planning also, again, I'll explain plan B. In the case of plan B, you can see this is plan B. In the case of plan B, what we can do, we can find out operating cost. What will be the operating cost? 1. The variable cost is 1, right? 1 into number of units. Number of units are 40,000. It's same for both, right? 40,000 plus what is the fixed cost? Is 70,000. It's not 25. It's 70 for plan B, isn't it? So what will be the answer? 7 and 4, 11. So 1,10,000. So this is our operating cost. So if we have operating cost, we have sales, right? Both we have both the data. We can easily find earning before interest and tax. We simply deduct operating cost with sales. We simply divide operating cost with dollar sales. So then we get our earning before interest and tax. Again, we separate that pie of government. So 1 minus tax as they will take. Then that return which is left, we divide that return with capital invested, ROIC, to find ROIC, return on invested capital. So for ROIC, we got our answer here. So one thing we have learned throughout is how to calculate average, isn't it? So average return. So we now, what do we do? We add all these 5 returns and divide it by number of samples. How many samples? 1, 2, 3, 4, 5. 5 samples. So as you will divide, we'll get our answer 7.5. So likewise in plan B, so again we add all the returns and we divide it by number of samples, 1, 2, 3, 4, 5. So as we divide, we get our answer 9%. So we have got our return. So can we find standard deviation? Yes, we can, because we have all the 5 data, right? So we can find this, how much spread is there, from our average return, from this average return. So as we calculate, we can find this much of standard deviation and 0.99 of coefficient of variation. You can find, we have already learned how to do that. So likewise in case B as well. In the case of plan B, we can observe that our standard deviation is 14.82 and 1.65 is the coefficient of variation. So if we plot these all in our graph, if we plot these all in the graph, what is happening? Our expected sales is 2 lakhs, isn't it? Our expected sales is 2 lakhs. Our total sales is 2 lakhs, right? Expected value. So what is the deviation from this is sales, this is probability. So what is the probability of having 2 lakh sales? Probability is here. And plan A and plan B, as it will move on, the sales start to decrease, right? As sales start to increase, the chances of having more sale decreases. So in the case of ROIC probability distribution, again, our expected ROIC for plan A and plan B, right? Plan A was, what was the expected rate? 7.5, right? 7.5. And for plan B, it was 9. So expected ROIC for A and B, we can see, and we are now plotting both in graph. For plan A, we have brown line, and for plan B, we have green line. So you can see that more the spread, we know that up to now, more the spread, you can see in terms of green line, the spread of green line is more. That means that green is more risky, and spread of plan A is a little bit less, or it has shrunk. So that means that plan A has less standard deviation or less risk. So you can see from the numerical perspective as well, 7.4 standard deviation over 14.82 is much less. So that means that plan A is much less riskier. And as you know that higher the risk, higher the return. So as it is less riskier, you also have to understand that return will also be low. So return is also low, 7.59, and you can find coefficient of variation. As coefficient of variation is negative, so that means that it denotes risk. Lower it is, better it is. So in case of coefficient of variation, we have 0.9, and in case of ROIC, it's 1.65. So this is how we have measured all points. So finally, we come to our master graph. In this case, we have sales. We are moving on from 0 to how much? 0 to 2, right? Yeah, 0 to 1,20,000 and beyond. So in the case of revenue and cost, also we have moved on to up to 240. So you can see that fixed cost is fixed here. So there is nothing to do with fixed cost. It's a straight line. You have to pay anyway. And as sales move on, as sales, you start to sell the product. What happens now? This point is break even. Like as you move on with your sales, what happens? Your revenue and cost. So these are revenue and cost, both cases, right? This green line is cost, and upper line is revenue. Okay, green line is cost and upper line is revenue. And at the starting times, when you are not selling up to break even level, you are not selling up to 50,000 level, this is a point you incur operating loss. Why? Because your revenue, line of revenue, brown line is much lower. Brown line is much lower than operating cost. So operating cost is above, operating cost line is above sales revenue. That means that in this case, operating cost is much higher than sales line. So that means that we are incurring loss. And this graph denotes, this portion of the graph denotes our total loss incurred. Moving along, there will come one point when we keep on increasing our sales. One point will come when we will attain that 50,000 units. This is the exact point. See, you can see it 40 and 60. There is 50. So this one is the exact unit where sales is zero. Where our profit is zero and sales is 50,000. So here we incur no any profit, no any loss. So it's neutral, break even, equilibrium, whatever you want to name it, you name it, correct? Beyond this level, we generate profit. And where is the denotation? It is denoted by this area. Why? Because sales revenue, the line of revenue has surpassed the green line. The brown line of sales revenue has surpassed our green line. That is, green line is cost, and we are generating amount of profit. So I hope you are getting it. Second example, and I'll take your queries after that. So second example, again, fixed cost is same. Whether you sell the units or not, it doesn't matter, right? As you'll move on with your sales, what happens? You can see that green line is denotation of total operating cost, and this brown line is denotation of revenue. And at the starting time, up to 70,000 units, you will attain. This is 70, 60 and 80 in between, right? Up to 70,000 units, you will attain no any profit at all. So you are not going to take anything back home, correct? And after this neutral point, you will start to generate from the point 70,000 one unit, you will start to generate profit. Your first profit comes in your business from first unit sold beyond 70,000. Okay, so from this graph also you can see that this portion of graph is much bigger in the case of plan B than plan A. Why? The fixed cost is much higher. See, this fixed cost is much higher, and as fixed cost is much higher, it usually puts pressure on revenue per unit, pressure on revenue, and pressure on break-even point to have bigger numbers, right? To have bigger graph. Okay, so beyond this level, we are going to achieve this. So if anyone asks, how much plate of momo shall I sell? So if this is a momo company, how much plate of momo shall I sell in every month? So you might say you have to sell around 70 plates or 70,000 plates per month, per year to break even. So if company sells 80,000 plates, then 10,000 plates they earn profit, correct? So if they sell around 60,000, then in 10,000 units they incurred loss, less than equilibrium, right? So if they sold exactly 70,000 units, then there is no profit and no loss. So okay, so I have been explaining a lot of things at once. So any confusion, please let me know. I'll be happy to answer the question. So it is very important to understand these graphs. Any confusion, please let me know. I'm waiting for your queries. In anywhere, maybe regarding this graph, or regarding this calculation, maybe somewhere you might have been confused or not clear about. Please ask the question. So no confusion. Class section B, no confusion. Shall I move on then? Shall I move on with the next in the next slide? Okay, so let me ask you through the poll. I think nobody is responding, you know. Okay, so I'll give you 30 seconds to respond to the poll. Okay, 8 of you have responded. That means you are present there. Dipesh, Ivan, Marina, Ninju, Prakriti, Prasamsa, Revision Riwaj, Ronim, Shekhar, Smith. Shall I move on to the next slide? No confusion at all? Okay. Okay, we still had 10 non-respondent. So as we have majority, let me move on. So what are the conclusions about business risk? The conclusions about business risk are these. Plan B has higher fixed cost and a higher degree of operating leverage, thus is clearly risky. In the case of plan A and B, B has higher operating leverage means fixed cost, right? So because of fixed cost, it makes plan B much riskier. Telephone companies, airlines, steel mills, and chemical companies must have large investment in fixed assets, right? They used to procure huge investment. They have to procure huge fixed assets, and that needs huge investment. Thus, high fixed cost and high operating leverage in these cases. But in the case of similarly in pharmaceutical, auto, computer, and other companies, they need huge R&D or product development cost. For an example, different vaccines from all companies all around the world, Pfizer, Moderna, or even Verocell or Covishield by AstraZeneca. These all companies had to do huge investments in these vaccines as well, investments for their production, product development. So their leverage is also really high. Their business risk is also high. So their fixed cost is operating leverage means fixed cost is high. So this is something we must deduce. Another one, grocery stores and service business such as accounting and consulting firms, on the other hand, generally have significantly lower fixed costs and therefore lower operating leverage. Usually service industry do not need huge fixed assets to perform. They have less in terms of investment they need to make, and because of which, and especially other companies which fulfills our basic needs like grocery stores, like basic clothing stores, right? These usually have less fixed cost and less operating leverage. By its capital budgeting decision, or utility or any company can influence its operating leverage and hence its business risk. So while doing capital budgeting, as we have studied in capital budgeting chapter, so any new projects or fixed assets which when we are going to procure, when we are going to commence, then we have to do capital budgeting, isn't it? So what we can do, we can, while making capital budgeting decision, company can influence its operating leverage. It can choose whether to have operating leverage, with what intensity and all. So can we have alternative? These are the things which can be taken as a course of action for these capital budgeting decisions. And finally, once operating leverage has been established, this factor exerts a major influence in its capital structure decision. As we know that what is the fixed amount we want to take, as we know that what is that amount of risk we want to take in the business, then that fixed asset or that operating leverage definitely affects what is the kind of capital structure we want to take, whether we want to take more debt or whether we want to take more equity. For an example, if I have to decipher this, if fixed cost is really high, maybe we want to take less debt. Why? We would not want to add to the burden, right? We would not want to add fixed cost to the burden. Rather, we would raise funds through equity. If fixed cost or operating leverage is less, maybe we want to add more debt financing or more more loans, right? So that might be the way we establish our capital structure decision. Now we have come to end transition where we are going to discuss financial risk. We already discussed that, and as Dipesh also mentioned, that financial risk is the risk from debt, and operating risk is the risk which is inherently present in the business naturally, according to the nature, according to a lot of other factors which we discussed in the last class. So what is financial risk? Financial risk is nothing but the risk which is imposed, resulting from use of debt or leverage. So what might be the risk, you might ask, right? So risk is simply firms going into liquidation. One of the risks might be firm going into liquidation because of excessive debt. Now, to an extent, which fixed cost securities, debt and equity? We have two options. Option A, 100% debt. B is 50% debt and 50% equity. Assume Ace Education Limited have 10,000 shares, right? Let us take an example, one simple example. Ace has 10,000 shares, and out of those shares, it can buy back its shares in $20. Now, how can some company buy back its shares? What it can do? If you are a shareholder, if company tells you that I want to buy back your shares, what will you do? You'll simply tell the company that, wait, I have bought it in book value 100, but I'll not sell it in 100. Why? Because I'm getting better price in the market. If price in the market is 500, then you'll demand 500 from the company. So you will always demand current market price from stock exchange. So to restructure or buyback, you need stock at $20, which is a current market price. So in this case, amount borrowed and what is the debt capital ratio? We are taking different examples of debt and then understand the effect of financial risk. So if we borrow $20,000, if we borrow 40, 60, 80, 100 and 120, so debt is similarly 10%, 20, 30, 40, 50. We went up to 60% up, right? So interest rate on all debt, what is the interest rate? 4, 4.3, 5, 5.6, 7 and 10. So can you see the pattern? There is definite pattern. As we are increasing our debt, as we are increasing our debt, we are increasing our debt capital structure. What is happening? all the metrics are increasing. Our interest is also increasing. So you might say that's why, okay, why we are assuming that the interest rate is increasing. So in this particular example, we are assuming that debt is supply of debt is constant, and as we are taking more debt from different sources, our cost also increases. So that is one example, but there might be some of the situations like in context of Nepal, if you go to banks and tell them that you are going to take loan of 50 lakhs rupees, then maybe your interest will be base rate plus 1.2% premium, for an example. Okay, base rate plus 1.2 premium. So if you go to bank asking for 50 lakhs loan, so if you go to bank and ask for 50 crores loan, right? So what might happen? You might get loan in base rate plus 0.2, base rate plus 0.2. Why? Again, economies of scale, bargaining power, money attracts money, different theories apply in the same case. So this might not be same for every situation, but in this particular example, we are assuming that as our debt is increasing, our cost is also increasing. Why? Because we are assuming that our debt supply is limited and we are taking debt from different sources. So okay, we are trying to now put this all concepts in practice and understand how the debt affects overall earnings of our company and how much of financial risk does it impose. Okay. So let me zoom in for your convenience. Okay, so our debt capital structure was 0. There are two different cases. We have already discussed that. Our two different cases are, one, option A is 100% debt. It's not debt, it's equity, 100% equity. There is no debt at all. Okay, so I'll correct the slide. Second case, 50% equity, 50% debt. So we are trying to understand in the case B, as we will introduce 50% debt in case B, what are the changes in profitability and everything in the ratio of the company, correct? So let us see what happens. First case is zero debt, debt to capital debt ratio 0, interest rate, tax rate 40%, invested capital to 200,000. Out of that capital, 0 came from debt, to 200,000 came from equity. Shareholder outstanding was 10,000. Shareholder outstanding was 10,000. Similar example which we did in the previous case. So let us take an example, 5 different demands like in the previous one when the economy was terrible. So same example which we did in the previous calculation. Probability was 5, 20, 50, 20 again. Now we are seeing that EBIT was already calculated in the previous slide, right? So this was the EBIT which was prepared in the previous slide. Yeah. Yes, Mawani. So yeah, Sunny, this is the same data, right? So same data, A and B, as you inculcate there. So operating profit 20, EBIT 15, 3, 15. Okay. So in this case, okay, so we are assuming that if our sales will be terrible, poor, normal, what happens is that as we will increase number of sales, our EBIT also increases, right? It's obvious. So this is a data input and we are inputting the EBIT. We are getting that point where we are paying that pie part to government, and after that what is remaining for debt and equity, we are finding ROIC, return on invested capital. This is it, and here is the interest rates. Interest rate is 0. Why? Our debt is 0 in the first case, right? We are only using equity, 100% equity. So net income, what is the net income? We are trying to find net income. So this is EBIT minus interest, EBIT minus interest, right? And again 1 minus tax. So you see we already discussed that. What did we discuss? Interest is tax deductible, dividend is not. Interest, please note it down somewhere, very, very important concept. Interest is tax deductible, dividend is not. So what is happening here? We are deducting interest and we are trying to find net of tax. So this net income is for only equity portion. This net is only for equity. As we will, so that is there was a pie, right? One pie is taken away by government, this one. So we are finding net amount. So this was the amount, this is the amount here. So what is happening? Another pie is for debt holders, and that is fixed interest, right? So here remaining portion, again after deduction of both, we are here after deduction of debt as well. So this is a remaining pie. So out of that remaining pie, whose pie is this? It is of equity holders, right? So equity holders, ROE. So how do we find return on equity? Return on equity means in the numerator you get return, in the denominator you get equity. Simple. So in the case of equity, you have 2 lakhs equity in the denominator. In the numerator, you have return, and return are these. Then what you can do, you can find ROE. Accordingly, ROE is this, right? And earning per share, how do you find earning per share? Earning per share, how do you find this? Earning for equity divided by number of shares, number of shares, earning per shares, per shares means number of shares down, earning means earning for equity. So simple. So in a lot of 80% of times, name itself is enough, in terms of ratio. So while you find EPS, you find like this. So what do? We again try to find average. We try to find average of all these earnings. We add all these 5 and divide by number of samples, 5, right? 1 2 3 4 5. So we have 5 different samples. We divide it, we get our average return of 9%. We get our average EPS of 1.8. Then again, as we know the data from 5 different factors, we can find standard deviation as well. So we did find standard deviation. The standard deviation is 14 for ROE, 2.9 for EPS, and likewise correlation coefficient 1.65 in the both cases. Okay, so this is the first example. So so this is the first case. So let us delve into the second one. So you can observe that as sales is increasing, what is happening? EPS is increasing, ROE is increasing. As we go beyond that 50,000 level of sales, as we increase our sales, what happens? Our everything increases. Our net income increases, our return on equity increases, our earning per share increases, right? We are performing better. So in a second case of 50% equity, our debt to capital ratio is 50%, our tax rate is 40, invested capital is 200,000, our debt is 100,000, 50% of debt, right? So our interest is 7.2 in that debt, the fixed cost of interest, and our shares outstanding is 5,000 only. Why? Now in this case, you can observe that there was 10,000. Shares was 10,000. We reduce it into 5,000. Please observe this. Very, very important to understand this. Understand this concept. In the case in the case 1, we had 10,000 shares. In the case 2, there was 5,000. Why? Because we are introducing 50% debt. So out of 5,000 and other 5,000 is generated by debt. Correct? So in this case, again, 5 examples: terrible, poor, normal, wonderful. EBIT, we can find it increases as sales increases. EBIT, again, that out of that pie, this is net. This is this, right? Net amount. This is this. Net amount is this. Okay. So again, we move on. We get our ROIC, return on invested capital, because here is return. And here is invested capital. What is our invested capital? 2 lakhs, right? $200,000. $200,000. And interest, we have to deduct interest, isn't it? Now, again, we are trying to find out of that pie. It has already been given to government. This one is for interest for debt, right? We have our interest is this, and it is fixed, isn't it? Interest holders do not demand more interest if you earn huge amount of profit. It's only relevant for equity holders. So this amount is fixed, and this remaining amount is this. This is a pie for whom? For equity holders. And this is remaining profit for equity holders. These are returns for equity holders. So this remaining return, we divide it by number of divide by equity, then we get our answer, this one, right? Accordingly, and then we divide by number of shares, and we get our earning per shares. So any, I think this is this, right? So what you can observe from these two data? What can you observe from these two data? As you can see, now you can like start to think what are the changes between this figure and this figure, right? Because we changed only one thing in both data. One thing which we changed in both data was one, we entered in the first case there was 100% equity. Second case, we lay off 5,000 shares and we bought debt. We brought amount from debt. Here equity was 10,000. Here equity is 5,000, and 5,000 out of that 5,000 other amount was brought in the form of debt, correct? And that is 50%, right? Another thing, please notice, less the equity holder, more risky the company is, isn't it? Because they have to, so let us take an example. If there is a one, right, to ओके, सो त्यो मरेको लासहरू हुन्छ नि है, मरेको लास अब आर्यघाट लगिरहेको छ फर इक्जाम्पल, अनि त्यो लाँदाखेरि 10 जनाले बोकेर लाँदाखेरि कतिको प्रेसर हुन्छ भन्दाखेरि 10 जनाले लानु र 5 जनाले लानुमा फरक हुन्छ हैन। 10 जनाले लाँदा लोड कम पर्छ, 5 जनाले लाँदा लोड बढी पर्छ, तर जस पनि त 5 जनालाई मात्रै जान्छ हैन। सोसाइटीले 5 जना यिनीहरूले मात्रै बोकेका थिए भन्नु भन्छ हैन। रिटर्न्स ह्याड द रिटर्न ह्याड द रिस्क, सो 5 जनाले मात्रै लास बोक्यो, यसमा 10 जनाले बोक्यो हैन। 10 जना भयो भने के भयो, मोर रिस्की हुन्छ, किनभने 10 जना लेस रिस्की हुन्छ, बिकज भारी बोक्ने धेर भयो, सो हैन। सो इन द सेकेन्ड केस भारी बोक्ने त्यो कम्पनीको भारी बोक्ने चाहिँ 5 जना मात्रै भयो, 5,000 मात्रै भयो भनौँ न। So as you divide from 10 to 5, as you divide from 10 to 5, 5 is much more riskier. And you can see ROE, from the point of ROE, you can see that है त्यो 5 जनाहरूको लड्ने चान्स पनि होला हैन। यो 46%, यो 5 जनाहरू हैन, यो 10 जना। सो 10 जना के भयो, 21% यहाँ लस भइरहेको थियो, यसमा 46 किन डबल भयो नि त। लड्यो भने हैन 5 जनाको लड्ने चान्स बढी हुन्छ हैन। कमायो भने और बिस्किट खाँदा पनि उनीहरूले दुईटा बिस्किट खाला पछि पुगेर हैन, और पार्टी खायो भने इन केस कसैको त सेलिब्रेट भन्दा नि कसैको चाहिँ त्यो वाइनहरू यस्तो फङ्सन पनि हुन्छ। सो त्यो फङ्सनमा नि उनीहरूले बढी पोर्सन पाउने भयो हैन। सो रिटर्न पनि बढी हुने भयो, रिस्क पनि बढी हुने भयो। यु क्यान सी द्याट क्लियरली, isn't it? So ROE changes hugely because of change of debt, isn't it? Because of change of debt and because of concentration of financing towards both ends, towards debt, towards equity. So these are the changes which is happening. One, second, EPS also changes by how much? Double. Again, you can see that earning per share, what is happening? Return बढ्दा नि huge छ, घट्दा नि ठुलो छ, right? You can see that. One is that prominent example. So you can see that average, what is happening in terms of average ROE. So here, so which one would you select out of these two? Which one would you select? So let me ask you, okay, which one would you select? Which option would you select for your company? Option.
2nd one. 2nd one.
Okay. First one. Thank you, Arjuna, for reply. So I request everyone to please reply. I have to understand. I have to also affirm that you are understanding the concept. Please, everyone,
I
please
said
respond.
second one, I
Yes.
guess. I
Okay. So everyone, please respond. If your answer is correct, great. If it's not correct, then I'll explain again. So which one would you select? First one is 100% equity financing. Second one, everything remaining constant. We are just changing 50% that financing into 50% debt and 50% equity. And we're trying to find that how company changes or how what are the effects which happens when we change the capital structure. So we are waiting for your answer, Alex, Ivan, Marina, Ninju, Raman. Ratna, Revishan, Rivaj, Ronim, Satyam, Shekhar, Smith. Please respond to the poll, everyone. So these concepts brings you it brings you huge clarity in finance, like यस्तो राम्रो एक्जाम्पलहरू जुन हुन्छ है. Okay, so since we are divided, also we have no response from 12 of you. Okay, so I'm keeping that in mind. सेक्सन ए मा एकदमै बढी इन्भल्भमेन्ट हुन्छ कि तपाईहरु भन्दा. सेक्सन ए मा चाहिँ अलि पार्टिसिपेसन बढी हुन्छ. So you should not like be a little bit off from section A, isn't it? Because same material is provided to both of you. Okay. So no response from 11 of you, but we have 7 response from first one for first one, and 5 responses for the second one. So can anyone volunteer for second one? Swaroop, Sarisma, Satyam, Prasamsa, and Ashish, can you please like put on your ideas? Why did you select second? Okay, so no any ideas. So anyone can volunteer to answer. Why did you think that way?
so because there is some kind of return coming from it.
Okay, some kind of return is coming from it. Or in both cases, return is coming from it, some kind of, right? In both cases. So I did not get your point specifically.
As you mentioned, त्यसमा चाहिँ अरु केही पनि चेन्ज भएको छैन. Only one thing is just change हैन सेकेन्डमा चाहिँ. अनि फर्स्ट वनमा चाहिँ there is many changes नि त. अनि त्यही भएर I think it is better.
Okay, see, okay, thank you, Archana. Thank you so much for that try. Okay, so the ones who have selected option A are correct, and the ones who have selected option B are also correct. Both of you are correct. Why? Because it depends on you. Again, why? Again, how much return you want from the company, So in the both cases, right? In the first case, it was, you can see there is 9% return and 14.82% of risk involved with it. But as your return increases to 13 in the second case, as your return increases to 30% in the second case, your risk doubled to 29.64%. So what we are seeing in these both cases, right? How much return you want? If you want 9% return, then, or you want low return and low risk, more certainty, right? You would go for option A. If you are kind of person who wants to take risk, like, right, so then you will select option B, right? So what did we understand from this whole both the cases? We must understand that as we introduce debt into our capital structure, our return also increases, our risk also increases for our shareholders, right? But why? Again, the example, right? 10 जनाले लास बोक्नु र 5 जनाले लास बोक्नुमा 5 जनालाई अलिकति बढी लोड पर्छ, बट जस्टिस पनि रिटर्न्स पनि उनीहरूले पाउँछन्, right? So I hope you understood it. Okay, so let me show you a graph as well, right? So this is a case of zero debt. You can see that its standard deviation is a little bit shrinked, and in the case of 50 debt, pura फैलिएको छ है, like a feather of bird, right? So it's more riskier. If second case is, this is a second case, this is a first one. In the second case, it's much more riskier. So this is something we have to understand. What is our demand of the firm? What is our demand, right, or requirement? So what we are understanding from that, what are the points to remember? One, earning per share increases with the increase of debt, isn't it? You can see that as we increased our debt here, our EPS also increased from 1.8 to 2.74. Our EPS increased from 1.8 to 2.74. But as EPS increased, its standard deviation is also high. So you must have to notice that as well. But the main point is that EPS also increased when we added our debt induction in the company. But it increases to the certain level, right? After a certain level, right? If you keep on adding debt like 50, 60, 70% debt, 80% debt, right? EPS will not rise. From 1.8 you got your EPS 2.74, right? But it will increase to up to certain level only. It will not keep on increasing, like as you'll take a debt into 100%, then you'll get your EPS 10 or EPS 7, 8, you will not get that, right? So you might say, so why, how? So we are discussing that why and how in this graph. Next, along with increment of EPS, risk also rises as we introduce more debt or finance leverage in our company. Just two things to understand from this. Our EPS increases, our risk to EPS also increases. Our return increases, our risk of getting that return also increases. So let us take an example. Same data हामीले केमा गर्यौं 50 मा गर्यौं नि 2.74 expected EPS, standard deviation of EPS was 5.93, right? How much was it? 2.74 and 5.93. 2.74 and 5.93, and coefficient of variation was 2.17. Okay, so likewise we calculate our debt to capital financing यसरी नै जसरी गरेको छ, exactly like that we calculate. What do we get? We get these expected EPS, we get these deviation. Our debt is 0, debt is 10, 20, 30, 40, 50 and 60. As we increase our debt, what is happening? From 1.8 our EPS is increasing to 1.95, 2.12, 2.31, 2.54, 2.74. Then it went down to 2.7. Likewise, our risk increases 2.96, 3, 3, 4, 4, 5 and 7. Risk is continually increasing, but our EPS remains constant after a certain time. So if we plot these in the graph, if we plot these data, in the graph, then we get expected EPS versus debt ratio. As we are increasing debt to 10, 20, so what is our 10 value? 1.95, 1.95. So what is our value for 20? 2.12, little bit above 2. So it is 2.12. What is the data for 40? It's 2.54, 2.54. As we move along, what is our proper data? It's 2.74, 2.74 in the case of 50. So from as we are increasing our debt, our EPS is also rising. EPS is also rising, but to the certain point, of debt equity ratio, it is 50% in the case of, in this particular case, it's 50% in this particular case. Likewise, our coefficient of variation risk also increases. This is our business risk. We can do nothing about it. And our risk of, since coefficient of variance measures risk, right? So it also increases along with it. So any confusion in this? So any confusion?
No, sir.
Okay, thank you. Let me move on to the next slide then. Determining the optimal capital structure. I think you have understood a lot now about capital structure, how much debt, how much equity and all, right? So we saw in the previous figure that, now these are theories which we have learned through practice. We saw in the previous figure that expected EPS of age education is maximized at a debt capital ratio of 50%. EPS was maximum at 50. It was maximum at 50%, isn't it? Does that mean its optimal capital structure calls for 50% debt? The answer is resounding no. Now again, I already told you, 6 of you who told yes, you are correct. 5 of you who told no, you are also correct. Why? Because it simply asks you how much return you want to generate from that structure, right? The optimal capital structure is one that maximizes the price of the firm stock, the one which has to increase price of the stock, and generally calls for debt to capital ratio that is lower than one that maximizes expected EPS. Now there is another factor called increasing the value of shares as well, increasing the price of shares. So as you try to find that that mix where your price of stock will boom. That is your optimal capital structure. That might not be your required capital structure, but that is optimal capital structure. So we are trying to find our optimal capital structure. Higher EPS is more than offset by corresponding increase in risk. Higher the risk, higher the return. So it is usually offsetted by each other. Even EPS is raised while we increase our debt portion from 40 to 50. Because of increment in risk more than increment in EPS, we might not want to increase debt in 50%, debt to 50%. Now here is very interesting interpretation here. You can see that from 40 to 50, as we move along, our EPS is increasing from 2.54 to 2.74. It is up to 20 pips, right? 20 points, 0.20. But our risk is increasing up to 0.99, right? So our risk from when we moved from 40 to 50, our risk is increasing by huge margin. But our return is increasing a bit only. So maybe we want to stay in 40. So that is what this particular sentence is trying to tell us. Our aim is to increase stock price as it turns. Structure that maximizes the stock price is also minimizes the WACC. Please note it down. We cannot find relationship between capital structure and price of stock. No one can find it. But one thing we know is that whenever we have lower WACC, when we commence any project with lower cost, then it usually increases the price. So relationship between weighted average cost of capital and price is inversely related. As price will go up, as WACC will go down, our price will go up in any capital budgeting decision or any project. So we are trying to find what we will try to do. We will try to find WACC, weighted average cost of capital, of our capital mix. Whichever gives us less cost, we will select that. Why? Because it definitely increases our stock price. We'll also discuss about this bit by bit. So at times it is easier to predict how a capital structure change will affect WACC than the stock price. Therefore, many managers use WACC to guide their capital structure decisions. Okay, so now WACC means weighted average cost of debt minus tax, because interest is tax deductible. Weighted average cost of equity and your return of equity. It's not tax deductible, so no tax adjustment. Okay, so I think we'll discuss about this in another class. Okay, so how was your how was your exam? Asti gareko?
So it was okay, not that great.
Why it was okay? Because I give you questions from slides itself, you know.
Yeah, but it was kind of confusing sometimes.
Yeah. So यस्तो थियो
We can't
तपाईहरुको त्यो
remember everything.
if
It's a
yeah,
problem. We can't remember everything. It's a problem with that.
no, yeah, revision is a mother of learning, you know, and you have to like revise,
Uh-huh.
isn't it?
Yeah, right.
If you had gone through those slides, then I think I deliberately made 15% of question really hard,
Mm-hmm.
because you need that portion of students as well who score better than others, and like who have paid total attention, right? They deserve that 15% extra, right? So I deliberately made 15% difficult, but apart from that, if you had understood concept, 85%, 85 would be your healthy score, you know.
Okay.
My expectation was that, but I don't know what the reality is. I have to go back and check. So it's an
Reality
open mic. Oh,
uh,
भन्नु न.
saddening.
Result is saddening. Okay. So you get your result instantly, oh, सकिने बित्तिकै मल्टिपल चोइसको.
अब yes भन्यो भने कति आयो पनि भन्नु पर्ला, नो भनौँ।
Okay, okay. So any
होइन होइन
other,
आउनु
yeah. So any other comments from multiple choice exam? Praveen, how did it go? Anyone else?
सर अलिकति कुनै कुनै कुरामा चाहिँ अलिक कन्फ्युजिङ के, अब त्यो पनि पढे जस्तो लाग्छ तर त्यो भन्दा नि अर्को वाला आन्सर पनि हो जस्तो लाग्छ, अनि त्यही भएर चाहिँ
So the trick of multiple choice is that two questions out of four, right? Na दुईटा चाहिँ एकदमै मिल्ने जस्तो राख्न पर्छ कि multiple choice मा.
राइट
अनि you will find that in practice as well. Later on, if you want to join CFA, right, Chartered Financial Analyst, right, out of four, right, na दुईटा चाहिँ एकदमै त्यो irrelevant हुन्छ. दुईटा would be like both are correct. How can you select between two? So I try to module like that this time. Modular answer like that. So you got your answer as well, oh, answer after you completed your multiple choice.
नो सर आन्सर चाहिँ पाएन तर वी गट आवर स्कोर्स.
Okay, okay, okay. So I'll circulate answers of multiple choice as well later on. So
Sir, can you put it in iLearn?
okay, sure. I will definitely do that. I'll share
Thank
you I learned. We have four more minutes. Anyone wants to share anything regarding class, something we want to improve, something you have not understood, or experience regarding your semester 4? How is it going?
It's going good, but we are a little bit confused in finance because it's very new to us. अनि
Oh yeah.
तर तर अब trying भनौँ.
And so since it is new for you, you have to give a little bit more time than other subjects maybe. I'll not tell you to give more than other subjects. Please give equal time. And you see, I tried my best to simplify concepts, give examples, give case studies, so that you theory book matte भन्दा नि maybe you'll understand through practical perspective हरूबाट भन्ने हो.
एक्चुअली त्यो हजुरले अगाडि त्यो आर्टिकलहरू पढ्नुहुन्छ नि तिनीहरू सबै
Yeah.
बुझेको हुन्छ होइन आर्टिकलहरू भन्दाखेरि होइन अनि जब त्यो when we start doing the questions it's really confusing के the main thing is
Yeah, building questions means
uh, when we start doing the questions actual questions त्यो चाहिँ अलिकति कन्फ्युजिङ हुन्छ कन्सेप्ट चाहिँ अलिअलि बुझा हुन्छ होइन तर क्वेसन
yeah.
गर्दाखेरि चाहिँ अलिकति कन्फ्युजिङ हुन्छ तर अलिकति वर्क नपुगेर होला हाम्रै.
Yeah, I think I think you have not done work. You have to revise. अनि I've been sharing you this है तपाईहरुलाई सबैमा मैले प्र्याक्टिस क्वेशन्स राखेको छ. I think if you could solve those. I learned मा है होमवर्क पनि अस्ति अस्ति राखिदिएको थिएँ मैले. त्यो कन्फ्युजन भइरहेछ भने पर्खिनु है. Okay, so MCQ. Okay. यसै from learning outcome 1 है तपाईहरुलाई sample financials राख्दै छ. त्यसपछि there are brief notes अनि also questions also यसमा भन्दा नि सेकेन्डबाट problem solutions here. You can solve these questions and you can then understand concepts along with the slides. Please do these questions as well. In learning outcome 3 also we have practical questions, problems along with answers. In 4 also we have practical questions. So please solve those, and if you do not understand नबुझेको we'll have one class जहाँ चाहिँ नबुझेको जहाँबाट भयो नि जे भयो नि we will solve, so that पछि यो सेसन सकेपछि we will have that session before exam. एउटा सेसनमा चाहिँ we will discuss जुन कुरा नबुझे पनि I will explain you. I think that will bring more clarity. अब अर्को पार्टमा चाहिँ अलिकति you have to do homework as well, like see the slides, like everything is already there, the concepts and all. अनि यो चोटिको स्लाइड जुन बनाएको छ unlike previous sessions, यो चोटिको स्लाइड इज सेल्फ इनफ के स्लाइडै इनफ छ. स्लाइडमा एभ्रिथिङ इन्कल्केट गरेको छ, लाइक फर्म स्लाइड्समै तपाईँको कन्सेप्ट्सहरू त्यही छ. सो इन एक्जाम वाट यु क्यान डु, यु क्यान सिम्पली लाइक गो थ्रु 1 2 3 4 5 6 7 8 and then revise through your slides, not going through other contents, right? So खाना इज रेडी, देयर इज प्लेट. अनि कुनै कुनै मिठो लाग्दैन त्यही पनि खाना पर्छ बिकज अब सागहरू मिठो हुँदैन नि, तर भाइटामिन ई हुन्छ त्यस्तै हो. अनि सिन्स इट इज न्यू आई क्यान अन्डरस्ट्यान्ड द्याट इट माइट बी डिफिकल्ट फर लट अफ यु, बट आई रिक्वेस्ट इफ कसैले जसलाई जति गाह्रो भएको छ प्लिज इन्टरेक्ट मोर, सोध्नु न बढी होइन. आई विल फाइन्ड वे टु मेक यु अन्डरस्ट्यान्ड. द्याट इज माई रेस्पोन्सिबिलिटी होइन. तपाईँहरूले नबुझिन्जेल मैले सिकाउनु पर्ने हो होइन. मलाई अब भन्दै भन्नुहुन्न मैले कसरी बुझाउने है योभन्दा बढी. So, but your homework should be you have to try on your own first.
Sir,
After you try गर्नु,
actual problem is होइन हामी त्यो बेला अन्डरस्ट्यान्ड भएको जस्तो हुन्छ होइन त्यो पढाउँदाखेरि बुझ्यो भन्ने हुन्छ होइन. जब त्यो क्वेसनै अरू बाट हेर्छ नि अरू ठाउँमा हेर्छ नि त्यो पछि चाहिँ अलिकति कन्फ्युजिङ हुँदै जान्छ कि. So
yes, फर द्याट एगेन त्यही त प्र्याक्टिस मेक्स द मेन पर्फेक्ट भन्छ अनि तपाईँहरूले सबै सक्नुभयो भने त पिएचडी होल्डर जस्तो भइहाल्नु भयो नि होइन यु क्यान सिम्पली गो एन्ड डु डक्टरेट सबै त कहाँ त्यस्तो एकैचोटि आई विल नट एक्सपेक्ट द्याट होइन
Okay. Thank God.
you cannot be like 100 सबै गर्न सक्यो भने त यु क्यान लाइक ब्रिङ न्यू कन्सेप्ट लाइक मोदिग्लानीहरू होइन तर एटलिस्ट यु हेभ टु डु इनफ विच इज रिक्वायर्ड पछि मास्टर्स पनि हुन्छ मास्टर्स इन फाइनेन्स हुन्छ यो लन्डन युनिभर्सिटीहरू हार्वर्ड युनिभर्सिटीहरूले मास्टर्स इन फाइनेन्सहरू ल्याएको छ त्यहाँ इफ यु वान गो देयर होइन त्यो अझै क्लियर हुँदै जाने हो नि त अनि सिएफएहरू गर्नुभयो भने सिएहरू गर्नुभयो भने पनि सबै यो फाइनेन्सहरू हुन्छ कि त्यो सब्जेक्टहरूमा है सो प्लिज किप फ्यु थिङ्स फर फ्युचर एज वेल बट पोइन्ट इज अहिले बेस स्ट्रङ भयो भने सजिलो हुन्छ है सो मेन पोइन्ट इफ यु डु नट अन्डरस्ट्यान्ड प्लिज लेट मी नो सेपरेट सेसन भयो नि बरु तपाईँहरू कति 10जना जति हुनुभयो भने नि होइन इन केस 10जनाले चाहिँ सर होइन हामीलाई अलिकति हाफ एन आवर 45 मिनट्स दिनु बिफोर एक्जाम सो द्याट वी वान अन वान बुझाइदिनु भन्नुभयो भने नि आई क्यान एलोट द्याट टाइम फर यु है पछि गएर बिफोर मिड टर्म है त बट प्लिज ट्राई आफूले चाहिँ आफ्नो एन्डबाट चाहिँ ट्राई गर्नु होला सो विथ द्याट आई थिङ्क वी हेभ कम टु एन एन्ड अफ द क्लास सो नेक्स्ट क्लास विल कन्टिन्यू आवर क्यापिटल स्ट्रक्चर okay so everyone thank you so much for your time and have a nice day bye bye
Thank you, sir. Have a nice day.